Welcome back, Breakaway Wealth. I'm your host, Jim Oliver, and with me today, my co-host, Nick Kosko. Welcome, Nick.
Hey, thanks a bunch for having me. We're going to be brief today, aren't we?
We are going to be brief because we got some great information to share that we just had in the session on the community. And if you haven't checked out our community, it's the CreateTailwind community, and you can get there by going to community.createtailwind.com.
You can also go to your friendly Apple or Android store and just type in CreateTailwind, all one word, and you'll find us there too. Come in and join. And what we're going to just share with you today, we had a great live Q&A, which we have every Thursday at 2:00. We had a great live Q&A, and we had recorded it, and we said, hey, wait a second, this was a good episode to share with our podcast community, and you're going to learn something. We addressed some frequently asked questions, and also you're going to say, hey, wait a second, maybe I want to join that live Q&A. I've got a question I want to ask, and you'll be able to do that.
Awesome. Well, without further ado, let's get to the episode. Besides becoming your own banker, what are some other good IBC books? So that's a great question. Not in any particular order. I would say A Case for IBC, building
your warehouse of wealth.
Building your warehouse of wealth. Easy for me to say. How privatized banking really works. I think if you're using it for debt, Dwayne Burnell's books, Financial Freedom in the 21st Century is a good book for debt.
Well, you think about, like, if you're Austrian economic minded, if you're trying to understand like a little bit of inner workings of the financial system, how privatized banking really works is a great tool. It kind of depends on your interest, right?
Yeah.
If you kind of get to the point type of person, the Case for IBC is a great tool. I always say my mom's favorite of all the books was Building Your Warehouse of Wealth. It wasn't a technical book to read. It was a little more abstract, right? And Nelson talks, you get a Bible lesson in there too, and some history lessons of the world in there. These aren't IBC books, but what's more important, Jim, right? Like, is it the policy or is it our behavior? Well, of course it's our behavior, right? So people bring up Rich Dad Poor Dad all the time. It's not an IBC book, but it's about going and playing that game. So you take Rich Dad Poor Dad, play the game cash flow. If you want to sit and you don't want to read a book, if you got kids under 10 or 12, get Cash Flow for Kids. If you got kids over that age and adults, people might look at it and see a board game that costs $90 or whatever, but I guarantee you it's better than any financial course you'll ever pay for, at some university or whatnot, right? It's phenomenal.
I think it's the best $100 or less. I think it's a little bit less than $100. The best $100 you could spend on teaching yourself and your children about money and how money works and what the goal is. There's other, one of the books I think is just overlooked, and it's one of Kiyosaki's books. And I think it has the worst title of any book that I could imagine him putting together. And it's Second Chance. So people think, well, to read that book, I need a second chance, but it's such a good book, and it in the Audible version of it is very good as well. But it goes through a lot of information. So a lot of cash flow quadrant, a lot of Rich Dad Poor Dad, a lot of the different books that he's written, and it touches on these different concepts. And there's a little bit of the book that's a little bit out there, like, but it's so good. I mean, it's so worth it. And I even think that a basic book like The Richest Man in Babylon, just it to me, like, people think that the book The Richest Man in Babylon, the message is, pay yourself first. Okay, I get that. Save 10% of everything that you earn. But it's, what the biggest message to me in that book is, Nick, is you can't do what everybody else is doing. I mean, so they're sitting on this hill and there's him and his friends are like, hey, we've all made about the same amount of money. We're all about the same age, but yet you're so far ahead of us. What, what did you do? Or what do you know that we don't know? And he kind of goes through the tenets of what, what he learned or what he knew to become the richest man in Babylon. And I like that he was different. And then another thing that he says is invest in what you know. And I was just on a call, a webinar before this with a person in Utah who works with dentists as business owners, provides all kinds of services to them so that it's turnkey. And I'm just telling you that this woman, she hasn't started infinite banking yet, but her understanding of it is like she's years ahead of where she should be. Just literally years ahead. And she might be more advanced than anybody I've ever seen on a first meeting. And I told her that, and she's like already got it, like, okay, I want policies on me, on my kids, on my business partners, and I just want as much money flowing through here as I can get instead of flowing through somebody else's bank. And I just thought, okay, one, like, where did you get all that? And so she's been in business for a long time. She's a young person like myself. So she obviously has learned a lot of good things along the way.
Everything's relative, right? And you got to think about, like, where are you right now? Are you in a mindset that there's a problem and you're trying to figure out that there's a problem, or have you already figured out there's a problem and you're like, hey, what's the solution? And, Kiyosaki, it's, in Second Chance, he's really just saying, hey, rethink your thinking about what you thought about money, right? And Nelson asks us to do the same thing. He sets it up in the book, because if you're not willing to rethink your thinking, if you've got arrival syndrome, none of those tools are worth a darn, right?
Yeah. That reminds me of another meeting that I had earlier in the week, Nick. And this person was like, okay, so my cash value in the first year. And, as soon as they said that, I thought, okay, like, is that the goal, to have the highest cash value in the first year? And they believed that that they were getting good advice about infinite banking, and they also believed that, and I guess I'll just tell you how it was described. So this person was approached by a Northwestern Mutual agent, right? And the Northwestern Mutual agent, because Northwestern Mutual isn't set up well to do IBC and take loans from Northwestern Mutual, their advice was, I have a bank that'll give you a loan. And so therefore, there's no direct recognition. And for anybody in the audience that doesn't know what I mean by direct recognition, is when you take a loan from certain companies like Northwestern Mutual, they reduce your dividend on the collateralized money. Now, remember, when you take a loan from your infinite banking system, your money doesn't go anywhere. You're borrowing the insurance company's money. So when you borrow money from Northwestern Mutual, from their company, they will reduce what you're being paid on dividends for that collateralized money. Okay. So I don't want to have a reduction in my dividend, Nick. And But the funny thing is that that's showing that Northwestern Mutual really doesn't want you to do it. But this person says, but I got a solution. I got a bank that'll loan you the money. And I'm like, okay, so now the interest is going to the bank. The bank is controlling everything. The bank could call that line of credit. They could convert it, right? There's all kinds of things. The bank is now back in control. And so, like this person said something like, and I know that based on Comdex ratings, Northwestern Mutual is the best company out there because they have 100 Comdex rating. Well, again, Nick, I know you already know this, but audience, you probably don't, is in 2008, there was a company, actually it's the largest insurance company in the United States, happens to be a stock company, but it was 100 Comdex. Right? It was AIG. Now, if you do any reading about AIG, you'll find out that 30 days later, they were insolvent and we had to bail them out. And the reason we had to bail them out is they had gambled, heavily gambled. I'm talking about roulette, maybe Russian roulette. And it was AIG had invested in derivatives. And if you understand derivatives, the derivative market is a multiple of the world's GDP, which means that they could bring down the whole the global economy because it's gambling. It's a bet. 20 people in a division in London, England for AIG almost took down the largest insurance company in the country. But let me ask you a question. I mean, the ratings companies, they had to know about this derivatives division, right?
Sure. So
that had to be a potential liability. How were they rated 100 on Comdex?
There's no responsibility in the rating.
Right.
Right. They're not fiduciaries. I mean, they're for sale. Paid for, right? Those of you that don't know what a derivative is, it's basically an insurance contract on an insurance contract, which can keep going. And as Warren Buffett said, they are financial nuclear weapons.
Yeah.
And they are not to be played with. And, to Jim's point, some of the carriers that are most ideal for IBC don't have the highest ratings because they don't play in the derivatives market. They're not swimming, with the current of the financial currents in that regard because they're so ridiculously conservative. Jim, we have I don't know if you remember this conversation a week or so ago. We got another new client who was talking to another friendly Northwestern person, and that guy was encouraging him to do IBC so much that he actually got an illustration from a different carrier to show this client. So wow. he knew that Northwestern Mutual was not ideal for this, or that there's some penalty to him using his product to do IBC, that he went to an outside shop to get an illustration. It's fascinating to me.
Now think about this for a second though, Nick, is you're going to have these policies for 20, 30, 40, 50, 60 years in some cases, right? I mean, Nelson had a policy in 2018 when he passed, was it 2018? 2019? And he bought it in the 1950s. Okay, so almost 70 years he had that policy. Do you want to be with a company that doesn't like what you're doing for 70 years? I mean, most of the time when you meet somebody that is, they're celebrating their 75th wedding anniversary, it's not because they're on separate pages. It's not because one of them likes Italian food and the other one hates it. I mean, they're in sync. And so I want to be in sync with my insurance companies. And so,
how's the servicing work? Important. Yeah, how's the servicing work in that situation? Right? Like, hey, you want a loan? Like, look, our awesome office manager, Kelly, had 3 days away with their daughter, and by all means deserved that. And we had some client requests this morning where we had some kind of urgent loan requests. Guess what?
Yeah.
Look what's happening. Our clients are going to have their money tomorrow.
Yeah. On Good Friday. Yeah.
Yeah. It's pretty incredible, right?
That's very incredible. And we, on the flip side of that, I had a client today that was about 7 or 8 years into their IBC experience and building their IBC system. And they had a loan request. It's been over 3 weeks with a company that is going through some struggles up in Ohio that we used to think was a solid company. And I would tell you that this person is, they're not like desperate for the money, but they're frustrated. And, what if you missed out on an opportunity because of that? Yeah. I mean, to me, that's not forgivable.
But what other questions does the audience have today? Don't, like we said, raise your hand, type in the Q&A box there. And what else has been on? What else has come before us here, Jim? I mean, I had a conversation earlier with a newer client, and he had 2 quick questions. Once I showed him our offer, and one was, how long does it take to get a loan that first time? He was unclear, because he was just so excited about funding his policy. He's like, hey, but I'm going to put 30,000 into this thing. What if I have a need in my business, pretty quickly? He goes, I'm a solopreneur, was his words. And I said, listen, you put that 30K in, you can borrow 18 of that right away. I said, I'm not going to try to overpromise you, but roughly 20 days on that first one. We got some behind the scenes things that happen in terms of establishing the policy. And there are cases we could do it faster for you. But those things aren't necessarily in our control when you establish the policy. After that, can happen extremely quickly. And his next question was, how long do I need to fund the paid up additions, and how long do I need to fund the base? That's what he was thinking about. So you want to talk about that?
Yeah, well, I mean, on funding the PUA and funding the base, you have to look at what those 2 different things represent, right? And imagine it being 2 different columns of a ledger. And let's start on the left side of the ledger if you're visualizing this. And all those dollars are dollar for dollar. And I'm just going to use 100,000, Nick, because it's a round number. We can see the percentages. So if I'm putting $100,000 a year into my infinite banking system, then on the left side, the PUA side, I'm going to put in 60,000. And that first year, I'm going to have 60,000 to use, right? It's always dollar for dollar. It doesn't matter what year you fund. On the whole life side, because you really are establishing something that you're going to be the customer and the owner of, right? And the owner always makes it an investment in the beginning. You're going to have, let's just say 60%, maybe a little bit better available on the total amount, but on the 40,000, you're going to have like very little, like say 2,000. Okay. So that means I'm going to put in 100, I'm going to have about 60-ish, right? Maybe 62, somewhere in that range. All right. Okay. So in the beginning, you think, well, that's not a very good deal. Why would I ever do that? Right. Okay. But the next year, you're going to have 95% of what you put in, right? So you're going to put in 100, have about 95. The next year, it's about the same. And then the third year, it's going to be really, really close to dollar for dollar, the fourth year, really close to dollar for dollar, or maybe even a little bit better. Okay. So then it takes 3 years kind of, let's say, to fund your business, because now you have a banking business. And what I mean by that is every dollar that comes in, you have more than $1 to use, and it only gets better and better every single year, right? So, so imagine in our ledger, right? On the left side, we have dollar for dollar coming in, and on the right side, we start to see this leveraging. So I'm going to put in 40. Let's say I'm going to have 45. Really doesn't matter. Anytime I have more than what I put in. And I know that every single year that's going to get better and better and better. Every year, guaranteed. Well, why do I still want to put money in a fund that's dollar for dollar? Well, I probably don't if I understand that what Nelson says in the book, that I'm going to need a series of policies. Okay. If I only have one policy and for whatever reason, I'm not thinking of it as a series of policies, then maybe I keep on funding the PUA. Right. But here's the cool thing. It's the same policy. If I fund the PUA in the 5th year, if I don't fund it in the 4th year, it's the same policy. And with the companies that we use, we can go multiple years without funding it and then kick it in again. So if I have a windfall or something like that, right? So I have a lot of flexibility, but where I'm getting the most bang for my buck is on the base whole life side. Because in year 10, I might, in that policy that I mentioned, the 100,000 with 40,000 a base and 60,000 a PUA, I might put in like 40,000, Nick, and have 60,000 to use. Okay, so let me ask you a question. You write me a check for 40,000. I turn around and write you one for 60,000. You okay with that?
Absolutely.
How many times today do you want to do that?
Well, how many times will you do it?
Exactly. As many as I will, right? Now, here's another question. And I want the audience to think about this in their head. That first check with that ratio, I put in 40, I have 60 to use. How big do I want that first check?
Yeah, this is where Nelson says, don't be afraid to capitalize.
Don't be afraid to capitalize. I mean, if I could write the check for 4 million, even if I had to borrow the 4 million, and you're going to give me access to 6 million, I'm good. Because guess what? I win. Because I'm going to go put 6 million in motion and it only cost me 4 to do it.
Yeah, it just comes down to, really understanding Nelson's principles and then go and putting it to work. So it's now I got to think, I've capitalized my system. We're not putting this money on the shelf, right? It's not some investment that I'm getting a bill for every year or every month that I'm going to go, I got to part with that money. I mean, you and I both get bills on the mail all the time, though I don't really care to pay those things. But when I get a premium notice, that's different, right? That means I get to take my money out of my commercial bank and put it in to a financial institution that I own and control. And then what do? We go put it to work. And it's that constant motion of thinking like the bank. The bank's lending department is arguably the most important department. And we got to go find a place to put it to work. And, if you're at the place where you got a lot of debt and you need to go recapture some of that interest that you're paying to other institutions, and wipe out those debts. If you're ready to go put it to work for cash flow assets, find the who's that can provide deal flow for you.
So if you were an executive, let's say you're working at whatever public company, like let's say Twitter. Okay, we're going to use Twitter today, right? Because Twitter's in the headlines. And you have stock options, right?
Okay.
And one of those comes up, you have the ability to exercise it, right? How does that work? I mean, you got an option at a price, right?
Yeah, I get to buy it.
Right. And then
at that price,
you get to buy it at that price. And then it could be worth more than what you were offered on that option, right? And so like, let's just say that the price was that your option was for $1 and the current price was $2. Would you see that as a bill? Like, oh my gosh, they say I can put $1 million in that. I don't want to do that. Like you couldn't write the check fast enough, right? I mean, to me, that's what you're doing is You
Yeah,
got
I like that.
You got something that came in and it says, hey, your stock price of this insurance company is $40. And for your $40, we're going to give you $60 worth of stock and access to $60. And it's even better than that because, hey, by the way, you can borrow some of our money against that $60,000 and go put it in play while your $60,000 is still here.
Now, Jim, wait a second. With the policy, if you put in 40 and get 60 to use, there's got to be a catch.
Well, there's a catch. You got to pay 4% interest currently. It might be 5 if you have an older policy on that 60,000. Okay, so
to use it, that's to use it, to put it to work. But there's no catch for your cash value balance to go up. There's a catch. There's no catch, but like I follow your analogy with the stock options, but in so many of those things, there's a catch, right?
Yeah.
Your catch could be in your stock that might sound great, but you can't sell it for 6 months,
right?
Something like that, right? Like they got your hooks in you somewhere. It's never a good deal, but with the policy, there's a catch. So let me ask you another question, because this question did come in from a client yesterday, and I answered him. He said, hey, and this guy is in his early 60s. He's a budding real estate investor. He's working on capitalizing his first policy, and he's mulling over expansion. Okay. And he said, Nick, what are the differences between a policy and using like a Roth? And he said, do you have anything I could read? You got any videos? So I'll share after you share a little bit, I'll share what I said to him.
Well, there's a lot of things different, but let's, and there's a couple places that I normally go when somebody asks this question, but let's just talk about a Roth in general first, right? Because then this will kind of answer the question. Can you put unlimited amounts of money in a Roth?
Nope.
No. Is the government in control of the rules of the Roth?
Yes.
Okay. So, and people say, well, it's not taxable. I've already paid the tax on that. All right. Did you know Social Security originally was never going to be taxable? But when the government controls something, then all bets are off. And if you are one of those people that say, I believe in the government, I think everybody who's running the government is, if you're that person, then infinite banking and freedom is not for you. Dependence and slavery is for you. And then all you can do is hope to be a house slave, not a field slave. So I hope you're a doctor. I hope you're an attorney. I hope you're making a lot of money. And that way you can be happy paying all your money in taxes and being controlled. And when someday on your deathbed, if you ever wake up, you're going to say, oh my gosh, right? So that's the first place that I would start. The second is when you have a Roth, okay, and you're going to take a loan, assuming you could take a loan from that Roth. Okay, what happens to if I took out, let's say I had a $100,000 balance and I took out 50 grand, what's growing?
50.
That's right. Okay, so if I have a life insurance contract and I borrow money from the insurance company and I have $100,000 of cash value, how much is growing?
And you borrow 50, all 100 is still growing.
All 100 is still growing. That's right. And who decides, like let's say I have a Roth and I could borrow money from the Roth, but I have all these different rules and I have all this, I have all these different kind of nuances that I don't really understand. In the life insurance contract, who's the most important player in the play?
The owner.
The owner. The owner has ultimate control. Who owns the policy?
The policy owner. The customer, the insured. You're not always the insured, but you know what I mean.
So what what control does the government have over my insurance policy?
Zero.
Zero. What control does the government have over my Roth?
All of it.
All of it. They made the rules. They made the rules, told me they were giving me a tax break. Aren't you a little suspicious that I mean, Nick, let me ask you a serious question. In your entire life, has it ever worked out well for you when the government makes the rules on your money?
No. As Nelson would say, every government plan has wound up doing the exact opposite of what it was intended to do.
You know why, right? Corruption and greed. Okay, now what Nelson would say too is the life insurance contract is a contract between individuals, right? It's not part of the government. It's on the you and me level, right?
There you go.
And so, to me, all of the other shortcomings of the Roth, because I want to hear what you said, and I kind of maybe know some of the things that maybe you said, but all of the shortcomings really don't matter when you just, it's kind of like that person that says, I'm going to go get a better interest rate from the bank. I'm going to borrow from the bank. Okay, well, do you realize the pitfalls that you have? I'm going to go buy universal life because my cash value in the first year is higher than anything else.
Right.
Yeah.
Right. I mean, I said two things because I knew I was just reminding him. Okay. And the first thing was I asked him what's the government's track record,
right?
And with their government programs. And then number two, this guy's trying to put money to work into cash flow assets and have cash flow to live on. And I said, can you do that effectively with the Roth? And he was like, no. I said, with that, there's a lot of rules about how you use the proceeds off of the quote unquote investment. I said, with the life insurance contract, you could literally take a max policy loan and go to Vegas with it and never pay it back. Like, there's no rules to it. You are, to your point, the owner. You're in first position, right? Nelson said we need to get banking back to the you and me level. And, what's the golden rule, Jim?
Whoever has makes the rules. Makes the rules. That's right.
Right. So who's in charge? And if you read, Nelson just belabored this once he realized on his hands and knees in prayer in the early 80s, the provisions of the contract says we're in control.
Yeah.
Right. I don't have to ask for the loan. I don't have to beg about what I'm going to do with it. I don't have to give you my FICO. None of that.
Right.
We are in control. And he just responded, I think I got one sentence back. Excellent. Thanks for the reminders. That I just knew it's kind of like the bike, the backwards bike.
Yeah.
It's been a couple months since we talked. I saw him on the Q&A, a month or so ago. He just forgot. He had to be put back on the bike again.
It's funny because that noise is constantly fighting against our progress, right? And reminding people, that's why we're here. That's why we have this community. That's why we're putting the courses in the community. And it's to help people eliminate that noise. And you might go through and watch one more lesson of one of the basic courses and say, oh yeah, I just needed to remind myself of that. I just needed to, just a reinforcement. But what it kind of reminds me, Nick, is, when you're planning your future and you're planning your financial freedom, and one, you got to know what the goal is, right? It's not to build up this pool of money and then live off it for the rest of your life and hope that you don't run out of money. Okay, that's what they want to sell you, because then Wall Street and the banks get to control you for your entire life. and the government. Because look, the government's not happy just controlling you for the 20, 30, 40 years that you're accumulating money, but then they want to control you while you're distributing the money. It's called required minimum distributions, right? What if I don't need the money? What if I hit the lottery? What if I sold my business? What if my, rich uncle died? I don't want to spend the money. No. You need to spend the money. We want the tax, right? But it comes down to this. When it comes to your financial future, do you want failure to be an option, or do you want failure not to be an option?
Not to be an option.
Not to be an option. So why would I try to save a half a point by using an outside bank or whatever? I don't even care if it was 2 points. And it's not, but let's just say it was. Why would I want to let the government control my money? Why would I put up those threats? Why would I allow those threats in my life? Because so if I'm in control, the only thing that can happen is I can make some really stupid decisions or make some mistakes. By the way, the latter you're going to make mistakes. But guess what?
Yeah.
If I'm educating myself, right, then I'm not going to make a lot of mistakes. Do you have any doubt in your mind that if you hired one of the best, world-class marathon coaches, and they gave you a year, right, to train for a marathon, do you have any doubt in your mind that you could finish the marathon?
Now, I don't want to stretch out over a year, Jim. I want to do it like 12 weeks. About all my knees will handle. But
well,
yes,
you're 40. You're 45. And look, at 56, I'm thinking I might need a year to get to that point. I probably don't, but you know what I'm saying. So my point is that in all of these other things, somebody is saying, "Hey, I'll go run for you, and then I'll let you know how we did." Hey, you know what? Today I was just a little tired. I didn't really run that hard. Well, okay. How did I do? Well, you get 3% on your run. Hey, you know what? I didn't run for a week. You lost money, right? Like give me the opportunity to go with the miles in, right? I mean, I don't want to put the miles in, huh?
Yeah. People are always, they don't have enough self-confidence to bet on themselves.
Yeah.
We've been so pantsed, honestly.
The Bible says that our lives are like vapor, right? They're short.
Yeah. Okay.
So, you wouldn't want to, could you imagine, you're 20 years old, you got $1 billion. Like what's an amount that you're like, I can't mess that up. And you're just like, well, what are you going to do? I think you're going to sit on the beach for the rest of your life, play golf every day for the rest of your life. First of all, I feel sorry for rich kids like that. Okay. Number one, but number two, when I'm 90 years old, I go, well, that was a pretty boring movie. That movie was pretty boring. Nothing really happened. The movies that we love is the struggle, is the, hey, I took a swing and I failed and I learned this. And you know what, the next time I hit a home run, it's that. If somebody hit a home run every single time they were up, that would be boring. You want to see the struggle. You want to see the overcome obstacles. And, when we're looking at financial freedom, and what IBC does is IBC aligns with financial freedom, with financial independence. Now, our whole childhoods, all we're trying to be is independent, right? Now, maybe not this generation is too. I was going to give a knock on this or on these young guys. I don't want Harper coming after me though. But no, everybody wants
stick moose on you.
Everybody wants freedom, right? What's the alternative to freedom?
Slavery. What's
the alternative to independence?
Slavery.
Dependence, right? Dependence, slavery. Yeah, but it's everything that we go to for the government. Everything. Any break that we get from the government makes us dependent and a slave. There's always a catch. There's always a catch. And governments are, look, we live in the greatest country in the world. Doesn't mean our government isn't corrupt. Doesn't mean the people that are running it aren't corrupt. They are. They're practicing legal plunder. They are stealing from us on a daily basis. Okay. Well, if somebody steals from me, guess what? I want to limit how much they're stealing from me because they're doing it legally. And they might not be subject to man's laws, right? But they are subject to God's laws. And one of these days, they're going to pay for that plunder, legal or not. So it's not my job for that, to take care of that. But that means I got to do everything that I can do within the law to fight against that and to use their rules and use the opportunities and the loopholes and everything else to my favor. Or I'm just dependent and I'm a slave, which at the end of my life, I will kick myself for being that.
Yeah. Here's the thing. We'll wrap up here because I know our time's about up. I think, we're grateful that so many people that we talk to, so many people in this community, they figured out that there's a problem, right? But what we're talking about here is when we're right here in this conversation, it's easy to agree, right? It's easy for you. Yeah, that's right. But be equipped when you leave here and you go out into the world. Just know the entire system is geared to get money to flow away from you and for other people to be in control of you and your money, right? And we have to fight that nature. Remember, that would be just going with the flow, and only the dead fish go with the flow. So, go back to the core principles. Go back and read a page or two or more of Nelson's books. Pick up some Robert Kiyosaki. Listen to these recordings. Watch a section of Tax Invisible or Becoming Your Own Banker on here and the coming videos that we got going on. So it takes some effort, right? But once you see it and you do it long enough, you're just not going to get fooled so easily on a day in and day out basis. I know you and I, we can't go anywhere and do a financial transaction the same way anymore. Like we're watching the guy in front of us buying something at Target going, well, there goes. You see their bills for $500. Like, well, there's lost opportunity cost. I don't care if you're paying a credit card or not. We just know it's just a totally different thing for us. So don't feel bad if you fall off the bike. Just be able to recognize that and reach back to us. We're your coaches, your guides to help you along. But that's my closing words, Jim. Thanks for everybody for coming today. Thanks for the questions that have been asked throughout the week. And we'll be back next week.
Sounds great. Thank you, guys. Have a great day.
Later.
All right, Nick. Well, you know what? I really like those Q&As, and I like today just talking about some of the questions that we had. And I know that sometimes people are hesitant to ask questions, and it just reminds me of when I was learning this, and I had the best person to ask questions that you could ever hope for or wish for, and that was R. Nelson Nash. But I sometimes would be a little bit nervous about asking him questions because I thought, well, he's going to think this is the dumbest question in the world. And he never did. He as you know, he was one of the most gracious people that you would ever meet in your life, and patient people. And so he would answer my question, normally not directly, okay, but he would give me the path to find the answer myself, which I am truly grateful for. But I bring this up, Nick, because I tell people this, and we tell people this, is that you can ask us any question you want. And I think that that's powerful, because if you're sitting there going, hey, I get infinite banking, but I have these questions. Right. I'll tell you what, we have people sometimes they take up half or more of the Q&A. They'll just keep on firing questions. They're on a roll that day. And I love it, because that means you're seeking knowledge, right? But knowledge doesn't equal understanding. That's where the Q&A comes in. If you want to understand infinite banking better, be on those Q&As.